Hi and welcome back to Cheeky Crypto. My name's Chris and it's fantastic to have you back with us for another video and I guess another important video, right? And different sort of reasons why it's important, but I've had a lot of people reaching out to me around stable coins, mainly because of everything that's happened with Luna and the UST, and lots of concerns around, what stable coins are safe. And I thought it'd be an ample opportunity now to do a video on stablecoins, explaining the different types of stablecoins that there are, and then give my honest opinion on which I think is the safest ones to use, right? And we're doing this. Obviously, I'm not a financial advisor. I am certainly no stablecoin expert. I never really focused on stable coins over my time in cryptocurrency. And what I mean by this is that I haven't in-depth searched stable coins because I was never planning on investing in stable coins, right? It's where I put it on the sides, and as long as it's safe, I'm not really too concerned. And I'll go over my thoughts and opinions on that, and that is what they are, right? They're thoughts and opinions I'm sharing with you guys and girls to basically help you guys and girls navigate the crypto space safely. So I hope you appreciate the time and effort that's gone into this video, and if you do and you want to support us, mash up that like button. It is really useful. It pushes the content out to like-minded individuals. There might be others that probably have the same concerns as you, obviously seeing the video and clicking on it, and you're probably helping them out. So I hope that this is useful. If there's questions or you've got further concerns that I haven't covered off in this video, do let me know in the comments below. Really trying to support the community with navigating this space safely, and we're not always going to get it right. Everyone's going to take learnings along the way, but we're doing it with good intentions, right? So let's get down to the desktop and let's have a look at everything stable coins. Okay, so I'm going to start here, right? And with the type of stable coins. So in this article, it sort of goes through the four different types of stable coins that we've got. So we've got fiat collateralized stable coins, crypto-backed stable coins, commodity backed stable coins, and algorithmic stable coins. So yeah, four types, and they're not all the same. So want to be really clear about this, right? And we start. Let's go through them. Let's sort of talk through them, and then we'll circle back and we'll talk about the algorithmic stable coins in a little bit more detail, based on what I believe to be factual information, right? So fiat collateralized stable coins. So these are stable coins that are basically backed one-to-one with fiat currency such as the euro, pound sterling, or the US dollar, for example. So really simple. They're backed one-for-one in most cases, if not all cases. And, that's basically what keeps it to peg, right? So really simple. And these ones are the ones that I tend to stick with. And there is arguments around centralization and decentralization, and we'll come on to that as we go through these different types of stable coins. But ultimately, this is the choice for me, and I'll explain that the reason for this is just because I think we've got regulations coming, and I think stable coins are going to be seen as a risk with the CBDCs, so the digital currencies of all the countries that they're going to be putting these programmable money, as people keep telling me, out into the abyss, right? So people are going to be using that. So these stable coins are seen as a risk by a lot of governments.
Do you ever feel like this using Ethereum? 𝗕𝗘𝗪𝗀𝗀 Network offers lightning-fast transactions with low fees, so you can do more of the things you love to do in crypto. We bring the power of Web 2 on-chain, paving the way for next-gen ideas. Like NFTs that change based on your video game scores, or automatic airdrops for everyday things like sending tweets, shopping online, or just ordering delivery. 𝗕𝗘𝗪𝗀𝗀 Network delivers a faster, cheaper, and smarter experience for Ethereum's next billion users. Get started today.
Commodity-backed stablecoins, as the name clearly implies, commodity-backed stablecoins are backed by different types of interchangeable assets such as precious metals, the most common commodity used as collateral for the basically the stable coins, right, is gold. So your precious metals, and we've got examples of this. Now some people will see these as better than perhaps or more decentralized than the fiat backed stable coins, because obviously gold, although heavily manipulated, or the metal market is, it's not tied to like one single entity like a government, for example. So it's more decentralized is kind of how I guess some of these people would sort of describe it. So yeah, that's your second type of stable coin. And then we've got crypto backed stable coins. And ultimately you might get a mix, you might get a stable coin that is a mix of several of these, right? Terra Luna, the UST were starting to, the foundation was starting to purchase cryptocurrencies to further peg or collateralize to peg their stablecoin, right? So yeah, it's just interesting in my eyes. But again, comes down to that centralized versus decentralized sort of argument. And they're normally overly collateralized. So you might have $1,000 worth of ETH to obtain $500 worth of stablecoin, for example. And again, they've got some examples of how this all works. And this isn't really a video for that. I really just want to put a video and say what are the types of different stable coins, right? And give my views and opinions on it. And then you've got the algorithmic stable coins, right? And ultimately these are just backed by code. They're not really backed by or necessarily backed by anything, right? And I want to be really clear. There's lots of people talking about them being Ponzi schemes, and there's arguments to say that there are, and I guess there's arguments to say that they're not, right? So let me know in the thoughts below whether you think algorithmic stable coins are just a Ponzi scheme or not. Just let me know. Really interested to get your views and opinions on that, right? And yeah, like, let's be brutally honest, there hasn't been one that's succeeded yet, right? So with that said, you've got to deem them, in my humble opinion, that they're high risk. And I don't think a lot of people realize this, and I don't think a lot of people like myself really pay too much attention to stable coins as much as perhaps we should have, right? And there's lots of people that are telling me to get into Anchor protocol. You get 20% returns, and sometimes you've got to sit there and you've got to ask yourself, is this too good to be true, right? And 9 times out of 10, yeah, it is. But with fiat-backed stable coins, you can get 8-10%, depending on where you look. So that kind of gives you a good reward, but actually I think it's safer. But let me know if you disagree with that. Like, it's just my opinion. So let's have a look at some stable coins, right? So we've got VUSD. So this is one that VeChain have recently set up, and it's one that I'm getting a lot of questions about. Like, what are your thoughts on VUSD? Now, I'm a big holder of VeChain as the VET token. I don't really hold too much V4, as in, like, I'm not trying to accumulate V4 like the fuel token. And lots of people ask us to do TA on I know I'm going off topic a little bit, but people do ask us to do TA on the fuel token, V4. And is it a better investment? Well, the answer is no, in my opinion. You should really just stick with VET token, right? The fuel is really just to fuel the ecosystem, rather than an investment, and the price can be changed at will by VeChain, for example, to make sure that the cost of the fuel is low. So yeah, for me, not really like one to really sort of invest in as such. Now, VUSD for me, I think it's fantastic, but it depends on in what context you ask me. So I think it's fantastic for the VeChain ecosystem, because this and wrapped VET, for example, is a big indication that you're going to get some DeFi protocols starting to build on the ecosystem. So I think this is fantastic. But let's sort of go into what I actually think about it safety wise. Well, it's backed one to one to the US dollar. So we can say that this one is a fiat-backed stable coin. And on that basis, I would say it's much safer than an algorithmic stable coin, for example, because it's fully backed one for one, right? And I guess the questions, and I don't necessarily have the answers for these, but I can obviously ask the team for some answers on it. It's a relatively new stable coin, right? Where's the proof that it's backed, and all this sort of stuff. And I'm sure that VeChain, a very trusted blockchain company, would be able to detail that out transparently. So I have no concerns with this particular one. When I say no concerns, no concerns from like the team side of things. Like, I trust the team, and with that, it means it's backed one for one with fiat. So I've got no concerns there. The only concern outside of that is regulation that is hovering over the space. But ultimately, I think that VeChain are a responsible company, and if regulations come in, I think they will comply, and the business will do well, and so will VUSD. So that's kind of my opinion on that one. Hopefully it was useful, and if you've got any questions, do let me know in the comments below. The next one, and it has to be sort of brought up, is the UST, right? We have to bring this one up. This is an algorithmic, or it was an algorithmic stable coin, and it's backed by nothing but code and maybe some collateral, with Bitcoin, for example. But that hasn't worked out, so it kind of spiraled out of control, which is something that typically happens with algorithmic stable coins. And I'm not an expert on it, right? I've done a lot of reading since everything's happened with Luna, for example, but ultimately I'm risk averse anyway. I would never have been invested in the UST, but I have been invested in Luna, which is, I guess, the same entity, but that was with my lack of understanding and of the algorithmic stable coin, right? And we say every day's a school day, and learnings are always made along the way, right? And this is a painful learning for many people that were invested heavily in Luna. So algorithmic stable coins are just something that are high risk, and I wouldn't invest in. And then we've got 𝗗𝗘, okay, and basically this looks like, from what I read, that it's one for one to the dollar. But I have sort of looked through the white paper. It's softly pegged to the dollar, and I don't think that's very clear on the website. I thought, I'm not going to be wrong, guys. I'm going to be right. It's softly pegged to the dollar, but it's actually utilizing cryptocurrency. Well, I say cryptocurrency. It's leveraging collateral assets provided by Maker governance, which will be, I believe, cryptocurrency. So this one's crypto backed, right? And again, for me, I'm not like really close to 𝗗𝗘, but it needs to be heavily collateralized against crypto. But again, one to read up on. I don't know how comfortable I feel with being softly pegged to a dollar, but you let me know what your thoughts and opinions are on 𝗗𝗘. Then we've got Binance BUSD, backed one for one by the dollar, basically. So again, this is a fiat backed cryptocurrency, and again, the only concern that I would have would be around regulations. But with all that said, we've seen some real positive strides from Binance when it comes to regulation, and I am confident that the team will always sort of do their best by the investors and the users and the community of Binance. So again, one that I am more comfortable using than, say, an algorithmic stablecoin. Then we've got Tether, and again, you know, for me, I believe Tether is backed by like 1-to-1 to the dollar. Here we go. So yeah, so here we go. All Tether tokens USD are pegged to at 1-to-1 with matching fiat currency and 100% backed by Tether's reserves. So again, a fiat backed stablecoin. But with that said, there are question marks over the transparency. So this is one that I think the regulations could have an issue with. But you know, again, I can't confirm whether that is factual information or whether that's just basically, you know, FUD out there in the space. So for that reason, I don't hold Tether, too much Tether anyway. I have like a, you know, for my trading bag, I use Tether, but outside of that, I don't tend to use it. And it's not one that I would suggest using, just based on the fact that I can't confirm or deny whether it's actually being fully transparent. Next one is USDC. Now, for me, out of all of the stable coins, this is the one that I think will not have problems with regulations, and again, the team behind it is strong. So this is one that I'm comfortable. Again, fiat backed stable coin, 1-for-1. So yeah, those I guess are some of the actual stable coins. Right now, if we go to CoinMarketCap here, we go to filters, go to categories, and type in stable coins, you know, you can see there's quite a few stable coins, right? And I'm not going to sit here and go through every single one with you. I kind of feel like that we've sat here now for about 15 minutes, right? And we sort of talked through the different types of stable coins. Again, I reiterate, I am not an expert when it comes to stable coins. But ultimately, I really wanted to just put a video out just to support people with a little better understanding of what stable coins are, what types there are, and you know, which ones are safer. So for me, the safest one is USDC, backed by fiat, 1-for-1, and very transparent and run by, you know, very well-known companies that are highly regarded. And for that reason, I think they will not have problems with regulation. Outside of that, Tether is another very popular one, perhaps not as transparent, allegedly. But, you know, I can't confirm or deny that that's accurate. I hold a little bit of it, not much. Most of it, like I say, is, you know, tied up in USDC rather than USDT. Outside of the others, I'm just not ever going near algorithmic stablecoins. So that's kind of my thoughts and opinions on it. Again, I'm not really too fussed about the centralization, decentralization argument when it comes to stablecoins or cryptocurrency, because ultimately, I feel that a lot of project teams are pulling the wool over people's eyes as to how decentralized their protocols actually are. So yeah, I hope this was useful. It was. Mash up that like button, subscribe if you haven't already, tapping that bell, selecting all the notifications so you never miss a video, and I'll catch you in the next one. Take care.